Today we're going to be talking about the profit and loss statement, also known as your income statement, or sometimes known as your statement of operations. Now, this is a very important statement for anyone who is running a business to actually understand. This statement is a statement that basically shows you how much profit or indeed how much loss your business has actually made in a given period of time. Now, this in combination with other financial statements, such as your balance sheet, for instance, and indeed your cash flow statements, can really help you understand the overall picture of what is going on in your business. Okay, so I wouldn't say for you to just simply take one financial statement and analyze that on its own. I would always say that you should be working towards the goal of looking at the overall financial picture of what is happening in your business. So your profit and loss statement then is a statement that basically is comparing two key things. It is usually comparing what you have earned compared to what you have spent in your business in a given period of time. Or in other words, it is looking at your revenue versus your expenses spent in your business, again, in a given period of time. So let's take a quick look at a sample profit and loss statement then, and what it might need to include, okay? So the first section of your profit and loss statement will generally need to include your income. So by this, we are talking about things like your revenue. We're talking about sales that you've made from any particular product or services that you have sold within that period of time, okay? So depending on what type of business it is you're running, the categories of income for your particular business will differ, okay? So you just need to be aware of what categories of income is applicable to your particular business, okay? And make sure that you are capturing that within the first section where the income needs to be captured. Now, the second section of your profit and loss statement will generally need to include your cost of goods sold, okay? Now, this can also relate to someone who is running a service-based business, but not necessarily producing an actual standalone physical product, okay? When running a business, you will usually have costs that is associated with actually creating that good or actually delivering that particular service. So for instance, if you are selling cups of coffee, just as a random example, you are going to need to account for how much it actually costs you to make that cup of coffee. So you might be selling that cup of coffee for £3, okay? But that is what you are selling it to the general public for. It doesn't necessarily mean that that £3 is the same amount of money that it costs you as a business owner to make that cup of coffee, okay? So what you want to do is you want to make sure that you're able to really narrow down how much it is going to cost you as a business owner to create that good, to create that service in order to sell it. And you want to make sure that you are capturing that particular cost within these categories. Again, depending on the business you're running, the kind of items that you might put within this category will look different to someone else who is running an entirely different type of business in a separate industry. Okay, so that takes us to what is usually known as the gross profit, also known as your total income minus what your cost of goods sold is. So this is the gross profit, because at this point of your profit and loss, we have not yet taken into account other expenses that are related to the business. Okay, so we have only at this point deducted the expenses that are related to actually manufacturing that product that we are selling. So the next section of the profit and loss statement that you want to really understand then is going to be, just like I was saying before, is your expenses. Now, this section of the profit and loss statement now needs to focus on the expenses that are attributable to running your business. And usually, sometimes you might hear people refer to this as the operational expenses of running that business. So popular categories of expenses that would fall here would include things like your salaries, your wages, telephone, internet, all those other type of expenses that are needed in order to run that business, but are not necessarily attributable to the manufacturing of that product that you are selling. Okay, once you've put into place all the different categories that needs to be factored into your profit and loss, what you then want to actually then include is things like your taxes. Okay, so depending on what country you're in, you might have things like your sales tax. You might also have things like property tax. Now, definitely if you're running a business in the UK and you have a physical shop maybe on the high street somewhere, then you're most likely paying business rates to the local council. Okay, so those kind of taxes would need to be captured within the tax section or the tax category. In some instances, some people might have a profit and loss template that requires them to actually capture other categories of income, okay, following them actually calculating their operational expenses. Now, this additional category of income would usually include things like grants funding or other types of business funding that you may have received in order to support your business. It might also include things like interest income, for instance, that your business has received as a result of making investment. So that takes us to the next step of understanding our profit and loss statement then, and that is going to be the step that includes us actually calculating what is our profit, or what indeed is our net loss. Okay, and you can do this once you have effectively analyzed what your gross profit is, you've deducted your total expense and maybe any taxes that you have, and you have now concluded that, okay, from your gross profit, taking away your total expenses, what figure are you left with? Because that figure should really be your figure that is allocated as your net profit or your net loss. Now, as you can see from the example here, you can see that for this particular business, they have made a consistent profit on average throughout that particular year, okay, apart from in 2 months, including February and July, where the particular business actually made a loss. Okay, a common question many business owners might have is, how often should I actually be running my profit and loss statement? Now, the answer to this is there is no right or wrong answer. Okay, you can run your profit and loss statement on a monthly basis, on a quarterly basis, or even on an annual basis. I would say that the answer to this heavily relies on how frequently it is that you are looking to analyze your business's finances and as a result take financial decisions. So if you're a business that has a lot of activity, a lot of business activity, and your turnover is particularly high, then you might find that you are running a monthly profit and loss statement so that you can make decisions on a more regular basis, compared to if you're a business owner that is just starting out in business. You might find that you don't necessarily need to run your profit and loss statement as well as your other financial statements so frequently. Okay, now generally with your profit and loss statement, if you show a loss, it basically means that you have spent a lot more in that period than you have earned. And likewise, if you show a profit figure as your bottom line figure, it basically means that you have earned a lot more in that period compared to what you have spent, okay, in that particular period of time. And when you are looking at your profits and loss statement, the bottom line figure particularly, i.e. the net profit or the net loss, what you're really looking to do is to make a solid decision on whether you need to increase your revenue or whether you need to cut down on your expenses. And sometimes you might find that you might need to do a combination of both, okay, i.e. increasing your revenues whilst simultaneously also decreasing your costs. So it's going to be important that when you're looking at your profit and loss statement, you are able to think about what sort of decision you need to make once you are looking at those figures in front of you and what they are telling you. Now, over time, your profit and loss statement can also show your business's growth, as well as actually highlighting different patterns in income and patterns in expenditure. Now, when you're looking at your profit and loss statement, some of the patterns that you may or may not recognize might include, seasonal fluctuations in your revenue, for instance, in a particular quarter or in a particular season, or indeed seasonal fluctuations in your expenses. Okay, and this can help you form a comprehensive decision as to what step might be best to take following you actually seeing these kind of trends within your profit and loss statement. Now, all of this being said, it's important that when you're looking at your profit and loss statement, it's important to not review this in isolation on its own. It's always important that you are able to review your profit and loss statement in combination with your balance sheet as well as your cash flow statement, because the overall combination of reviewing all these three statements will really help you get a comprehensive idea of what the financial health of your business is looking like.